stock recommendations as well as the view on the markets. Kunal Bothra joining in. Kunal, let's understand from you first up what the outlook is on the market. We've been talking about this range, 24,169 to 24,400 on the Nifty. Do you think that this consolidation mode will continue for some more time, or is there likely a breakout on the charts, and which direction are the markets likely to take?
Good morning, Aman. So I think, yes, it's a classical consolidation at play for the indices. And the prime reason for that, I believe, is the strong sector churn or the undercurrent in the sector churn. Because when you look at this in the last 1 month, there have been, a variety of sectors which have participated and then, led the index to move up higher on a staggered basis. For example, over the last 1 month, the underperforming sectors were the likes of PSUs, relatively as compared to the private sector names. Now, in the last couple of days, we've seen the private sector stocks taking a bit of a backseat, and the PSU stocks, leading the charge from the front. Yesterday, you saw the defense names, the power stocks, which are doing pretty well for themselves. FMCG stocks managed to show signs of a breakout, which were the underperforming sectors over the last 2-3 weeks. So I think it's more of a sector churn which is playing out quite strong. No major signs of data in terms of the open interest for both the Nifty and the Bank Nifty. That also puts into place the perspective that there is no major tweak of positions from the traders' perspective. So broadly, we would be looking out for those key strong psychological supports to hold on to the indices. 24,000 broadly should be a very strong support for the index. Any dips on an intraday basis closer to 24,000 should be taken as a good buying opportunity. And for the Bank Nifty, those levels could be at 52,000.
And Kunal, what stocks are you betting on then?
So I'll go with two buy calls, and the idea with the stock specific buys are specifically to focus on stocks where there has been high degree of momentum. So the first one which I would be suggesting in terms of a buy would be on the likes of ONGC, something which we discussed a couple of days back. So that's a stock which looks very attractive. Would look out for a target of 312. In fact, yesterday also the stock was up almost 5% broadly, closing in just around the 300 mark. So I'm revising the targets higher to 312 for ONGC with the stop loss at 291. And from the banking pack, the consistent change which we've observed is ICICI Bank surfacing as one of the better performing and more consistent charts. So would be a buyer on ICICI Bank. Would suggest a buy with a target of 1270 and stop loss to be kept at 1210.
All right, there you have it. Those are your top recommendations that Kunal is flagging off. It's a buy on ONGC as well as ICICI Bank, so sticking to the large caps. But in fact, it's mid caps that are in the spotlight when it comes to the stocks in news today. We've got Anisha joining in the studio to discuss just that, and let's begin.
If you like this video, then like, share and subscribe to ET Now.